If you haven't met us before, so myself, Alastair, along with Viral and Bob, are the directors of Australian Audit. And my background, Bachelor of Commerce, Registered Company Auditor, Masters in Forensic Accounting, SMSF Auditor, been with Oz Audit since 2008, and a director since 2014, and involved in real estate trust audits for pretty much that whole time as well. So got a couple of years of experience there. Obviously this is just generic training, so don't sue me if you don't like what I say. What I'm going to take you through quickly, just to highlight a few recent disciplinary actions that have occurred. Then, as part of the audit, what is the actual output? What do we give you at the end of the audit? Then a quick run through what are the requirements, the mandatory parts in relation to the trust accounting, and I'll finish up with all the common errors that we see, because there's some errors that we just constantly see people making over and over again. Some of them are really quite simple, so I'm hoping if I tell you don't do this, when we come to do your audit, you won't have made mistakes, and then I don't have to write the letter saying you made a mistake. It makes everyone's life easier. So, just to make sure we're talking about the same things, obviously the Act, regulations and code of conduct you're aware of. Also what you'll find on the DMIR's website, which I do actually recommend reading these if you haven't. There's the Trust Accounting Handbook for Real Estate Agents. It's only 24 pages long. It's not a difficult read, and it tells you everything you have to do to get your trust accounting right. So if you haven't seen it, if you haven't read it, please jump on, download it, read it. They last updated it in September 2018. They also put on there a guide to auditing trust accounts, which I know it's for auditing, but you can actually go and read it, because there's a couple of the bits of guidance from DMIR's that they have put in the auditor's guide that they haven't put in the trust accounting guide. So they're both there to read through if you want to. And they also have the compliance self-assessment checklist. So essentially the checklist that the proactive auditors use, you can download that off their website and actually run through that for yourself. So before the proactive people come out and audit your trust account, you can actually do it to yourself and check, are they going to find anything, are there any issues to be aware of, and fix them up before they come out. So in terms of recent disciplinary actions, I guess the reason I highlight these is really a little bit of a, why should you bother listening to me for the next hour? Because it's just to highlight there is some reason behind it. It's not only to make the audit process easier, hopefully that we keep your fees low, but also to avoid the fines, which are much more significant. So as an example, we had a trust accountant that withdrew $4,700 out of the trust account that they thought was a break fee that they thought their contract allowed, but because of the circumstances where the tenant had stopped contacting them, they didn't actually meet those requirements, and so they ended up with a $4,000 fine. We had a sales agent who had a religious group going to come through. He said, you have to pay $4,000 for the open day to see the property you're thinking about leasing. They said, oh, we'll pay you $1,000, paid it into his personal account. He then went on to sign up a lessee and had them pay the $20,000 deposit into his personal account rather than into the trust account. Obviously things you shouldn't do. He only went away with a $3,000 fine, but a 10-year ban from working. Another agency, quite a few, not particularly large errors perhaps, but 5 instances worth $17,000 where they made mistaken withdrawals, 3 bonds that they recorded as rent receipt rather than bond receipt. I mean, how many times do tenants pay a bond and not put a good enough description on it that you know it's a bond? A couple of deposits that they didn't bank by the next day, and out of all of that, the outcome was, it was just administrative errors. There was no dishonesty. The agent had voluntarily reported themselves, and they made full repayment of everything that had gone wrong. They still went away with a $10,000 fine, but it took the department 2 years to give them the fine after the events. $600 error and a few other property management things, a $4,000 fine, 2 bonds that were lodged late, just 6 and 9 days late, and a 3,500. An agent who stole, so fair enough, permanent can't work anymore. We had the agency that was called Integrity in their name, and they lodged some bonds late, but they also changed the dates of the bonds before they lodged them to try and make them not look late, $15,000 fine. And someone who didn't cooperate with their auditor, a $1,000 fine. So the department does issue a few fines. If you can try and avoid doing the things wrong, you avoid fines. So that's hopefully what I'm going to cover today. When we do an audit, sometimes there's a bit of confusion about what's the actual final outcome, what are the documents, who signs what. So to try and clarify it for you, after a trust account audit, there's 3 documents that come from the auditor. There's a declaration, a stat dec and a management letter, and there's 2 documents that come from the agent, the stat dec and the Annex A. That together is what then gets submitted to the department at the conclusion of the audit. So the declaration by the auditor is what comes from us. It says, I'm an auditor, I've done the audit, and we sign it. The stat dec by us says we are independent from the client, that we don't have any business dealings, that we're not a tenant of a property that you're the landlord or that you're managing, that we're not your tax accountant, we're only your auditor, and so on. And the management letter, which hopefully you get the letter that says we didn't find anything wrong. Occasionally, and tends at the moment to be, I'd say almost half the audits we do, the letter says we did find something wrong, but in most cases quite minor. Then you have the stat dec by the agent, where the agent signed this to say everything's correct. What we're constantly finding is people get a witness by someone who's not an authorised witness. It is a stat dec, so you have to have one of the authorised people, and even if they're authorised, they need to actually write on the stat dec what their qualification is. So having someone who signs it and says they're a receptionist isn't going to cut it. We do actually see those. So when you're getting them signed each year, just make sure it is someone who's on the list. On their website, they've got the list of everyone who's authorised, so it's not meant to be difficult. And the stat dec and the Annex A that attaches to that is when you list every trust account you've had open at any time during the year and what the balances are. That's it. There's 5 bits of paper. And what always comes up, but it was just a minor error, it was a tiny mistake. Unfortunately, because it's an audit and a compliance audit, even if we find a $10 error on the trust account, we're bound to report it. We don't have the discretion to say it was a minor error. So, unfortunately, so if we jump into what the actual requirements are, so hopefully this is the bit that's going to be most useful for you. The mandatory requirements of operating the trust account, and how can you not make the errors so we don't have to pick you up on them. Having the trust account named correctly. Every time you open up a trust account, you want to make sure that it's named in accordance with the requirements. One of the things we've seen in the most recent DMIRS guidance is they've actually changed the order of the terms within their example. So you may find if you're looking at the most current guidance, it could be different from what is actually on your bank account names as they are at the moment. It's not actually going to result in a breach, because when you look in the Act, it doesn't tell you what order those components have to be in. It just lists them dot com and says these are the mandatory parts that must be there in the trust account name. But if you are opening a new account or dealing with the bank, you may consider changing the order around to match what their current guidance is, which is always to have read the trust account at the front, then the name of the agent, including your trading names, and then your trading certificate number at the end. And obviously, if it's an interest-bearing trust account, you're adding onto that those letters IB to say it's an interest-bearing account, as well as the in trust for with the name of the client or the name who the funds are held for. It's not meant to be particularly difficult. We do frequently see when you go to the banks don't always know what they're doing, and so it ends up that the agent's having to go back to the bank to correct the naming on accounts when they're opened. And obviously, don't forget, every time you're opening or closing a trust, other than the interest-bearing ones, you have to fill in the form, send it to the DMIRS to let them know the account's been opened or closed. Bank reconciliations, probably the most common error that we see here. So what we're looking for when we check a bank rec is it has to now be done as at the close of business on the last day of the month, every month of the year. The old guidance sort of allowed you to do it to a couple of days before the end of the month in most months, but they've now made it very, very clear. It must be as of the close of business, which means you can't do your reconciliation on the 28th day of the month or on the 30th day of the month. You have to wait until the first or the second business day of the new month so that you know you've got the statements for the full calendar month to then reconcile to that balance. We did see an issue September just gone where in WA we had a public holiday on the 30th, but it wasn't a public holiday over East, and we had some licensees where they did the reconciliation on the 29th, thinking it was the end of the month, only for transactions to come through on the bank statement on what was a public holiday in WA. So it can occur. The point to make is that don't try and do your bank rec on the last day of the month. Wait until the first or the second. We've also seen a few instances where if you print out your online banking statement transaction history on the night of the 30th, you can have transactions that will show dated the 30th, but when you get your statement 3 days later, the bank has changed the date of those from the 30th to the 1st. And so we've seen errors occur that when we look at the statement a couple of months later, the balance we're seeing at the end of the month is different to your online transaction history printed out on that very last day. So wait until the first or the second day of the month to make sure you've included everything. And the bank recs need to be signed and dated by the agent. So in order to do that, you do need to print them out, at least for the bank rec, print it out, put a signature on it. We do look for that. If it's not signed, if you print it out more than 10 days later, most of the softwares now put a timestamp on it so that you can't even backdate it without us knowing because the timestamp is generally there on the printed copy. If there's unpresented checks, I mean, most people aren't using them now, but if they are there, you do need to follow them up. The bank recs where you have an unpresented check that's 2 years old, just doesn't cut it. It indicates that you're not actually looking at those statements. And any adjustments carried forward month on month, it just indicates that as the licensee, you're not carefully looking at the bank reconciliation enough to identify those errors and follow up on them. And interest-bearing trust accounts. You do have to reconcile interest-bearing trust accounts. The number of people that we see say, oh, but there's only interest coming in, it's only an interest-bearing, and there's no reconciliation. And especially if you happen to be holding multiple deposits, for instance, in relation to an off-the-plan type development, the requirement to reconcile the interest-bearing trust account still applies. It's exactly the same requirements as for the general trust account. So it's still the 10 days, it's still signed by the licensee. About the only way we've found that you can make it a bit easier if you are one of those agents who has 80 or 100 interest-bearing trust accounts, you can do it on a portfolio basis. So I put a little example there where you can actually have a schedule of all 80 interest-bearing trust accounts, and then the licensee can review it and sign it once as a reconciliation. So that's about all you can do to make it simpler, but it still needs to actually be reconciled. Depositing money, the close of next business day applies, so whenever you're receiving cash, and this is something we do actually look at, and it shows up quite clearly on some of the reports we can get out of the trust software, is what day did you receive it, what day did you bank it. If it's ever more than a day apart, it automatically, well, unless it's a weekend, but next business day, it automatically becomes a reportable breach if you have received cash and it's not banked the next business day. The idea of, oh, it was only $10 or we were too busy, they don't accept those as reasons for not banking cash by the next business day. And if it is the cash received, you do still have to issue the receipts. And all trust money has to be deposited as soon as practicable. So occasionally we find people who charge deposits on lease applications and you have a stack of envelopes with cash in them under the receptionist's drawer, something like that. Even if it's not a tenant yet, if they're giving you cash as a deposit on a lease application, you still have to bank it into your trust account.
Question?
Yes.
6G says not required for electronic receipts. What about bond monies coming in? Is there a separate requirement for bond monies coming in electronically?
I've seen the guidance from the department where they've said if it's bond money, you have to issue a receipt regardless.
Yeah.
I haven't seen where that is in the Act, but I have seen the department in their guidance saying if it's bond money, you must issue a receipt, regardless electronic or otherwise, and we'll give you a fine if you don't.
Yeah, that's where I'm coming from, because on the website it says that on the Act, in the Act, you can't find the specific requirement for that.
And there's quite a few things we've found where the Act is reasonably brief, but then the department comes and gives additional guidance or their interpretation on top.
Yeah.
And then when they come and do an audit or they do a proactive compliance, if you haven't complied with their guidance, they then say it's a breach. We're going, I mean, it's the same with bond reconciliations, which I'll come to shortly, where they have a stance on what's required. So we would always encourage you to comply with their requirements. And our approach would be if they've put something in writing and you don't do it, in a sense, we're still bound to report it, even though it's not a requirement of the Act.
So just on that, just to clarify the point, it's not a requirement of the Act, it's on the website. So what do you report? Because ultimately, my compliance is to the Act.
Yeah.
And I understand the interpretation of the guidance, but it doesn't help if it's inconsistent with the Act, which takes precedence.
The Act will always take precedence, but if the Act is silent, and so if the department were to give guidance that contradicts the Act,
Yeah.
that's different to if they give guidance that's in addition to the Act.
Yeah.
And our view would be, if they've given guidance you don't comply with, then we put it in our management letter. But all we can say is, you haven't complied with the guidance of the department.
Yeah.
We can't say you've breached the Act. But from their perspective, they still see it as something you should have done that you haven't done.
I won't stall you at this point. It's just, I mean, I could be called up if I forget to do an auto receipt on the email.
Yeah.
You know, I just want.
I feel your pain, I agree with it, but
Alastair, record to accounts by close of next business day. So you have to issue a receipt where it's not electronically deposited. But so is that
So
cash or check rather?
the way the Act is written is even saying that if you receive an electronic transfer, by the close of the next day, you should have recorded it into your trust accounting software.
That is receipt.
So when you receive money, it doesn't give a separation between cash and electronic. It just says if you've received money by the close of next business day, you should have recorded it. So even where it's an electronic money coming in, my reading of that is by the next day you should have entered it into your software.
We're just a small business starting, so we don't have that many transactions in our trust. But I've been to the department 3 times, and I said, I just do a reconciliation every week. Is that enough? They said yes, that is. You don't have to do it every day, but if you know you're only having a transaction coming once a week, and that was they viewed that as good practice for us in writing.
Yeah.
So not doing it by close of business the next day.
And that's one where they're almost giving guidance that's more generous than what the Act says.
Yeah.
So withdrawing money, again, should be reported by the next day. If you're using cheques, obviously don't pre-sign them. And where they do have or bearer that often is pre-printed on your cheques, please cross it out and put the not negotiable on there. We have seen instances where people have done payouts of funds and they then didn't clear. So it's good to make sure you've got a process internally that if you're receiving cheques or receiving BPays, that they do actually clear before you pay them out, because if it then bounces and you've already paid it out to an owner, you end up with an overdrawn ledger, which obviously isn't great. And any time where there's an overdrawn account or an overdrawn ledger, you mandatorily then at that time have to email DMIRS and say, sorry, trust account was overdrawn, let the auditor know it was overdrawn, and as the agent, put money into the trust account to top up that overdrawn amount as well. And one of the, this last paragraph, one of the things that's in the auditor guidance but not in the agent guidance is they actually specifically have mentioned that idea of if you as the agent want to pay your owner's bills on your credit card and then reimburse it, you can't do that unless you've got a specific permission from the owners. So they've obviously seen some agents who think it's a great way to earn a few extra frequent flyer points to pay all the bills on their credit card and then reimburse it, but they've said unless your owners have specifically approved it, doing so would be considered a breach. And payments to the agent. We used to always see end of the month and then owner agent payout. In the most recent guidance, they've now started saying they encourage that to be done weekly. So again, this is one where the Act hasn't changed, but in the department's guidance, they're now actually indicating that if you have funds due to yourself that sit in your trust account for an extended period of time, they see that like a buffer account. And so they're now encouraging agents on a weekly basis, any funds that are actually due should then be dispersed. One of the things we've seen is that not all of the software products actually allow that. And there's some where if you did run an agency payout mid-month, it'll come up and say nothing due, because they only calculate the agent fees at the end of the month. So again, that's one where there's a limit to what the software will allow you to do, but what the department is saying is please make those payouts on a regular basis rather than waiting until the end of the month and then waiting another 4 weeks and then actually paying yourself. And obviously the service needs to have been provided. So some of the softwares where they, for instance, a property inspection, if your software's automatically generating a property inspection charge, that can be a problem if you don't actually do the inspection. So you need to make sure you've got a process to perform the property inspection before you then charge the fee for it. Because that can be something where if we see a property inspection charging us the report, if you haven't done the inspection, haven't got the report, it can then end up being an overcharge to an owner. Bonds, one of the things the department's been very particular about is once you receive it, 14 days, make sure it's paid to bonds online. And one of the queries that we've seen come up is in terms of bonds paid by instalments. And when you do see that, you're not allowed to wait until you've got the full bond before sending it through, but every instalment of the bond that comes through needs to be sent within the 14 days of receipt of that instalment. And we've quite a few of the examples of fines we've seen for late bonds and only a couple of days late. And again, one of the things we see there is that they say, well, even if you are an agency that's quite small without staff, on holidays, Christmas time, it doesn't matter. That 14 days requirement still applies to make sure that funds are sent through to bonds online promptly. And what we're seeing changing, they've said this month, is that those monthly bond reports won't be emailed anymore, that you'll have to actually log into Bonds Online to download them. So for any of you who are waiting for that email to come through with the bond report in order to do your bond reconciliation, the department have just released comments saying they won't actually extend that. They are going to send an email saying, here's the email that doesn't have the bonds report attached, please log in and download it. And the bond reconciliations is one that comes up because, again, it's one where the Act is silent on it. The regulations, the Code of Conduct is all silent on it. And then we have the 2013 version of the Guide to Trust Accounting that said you must reconcile it quarterly. And now the new 2018 version that again is silent on it. And so we've got, in the current versions, none of the documents that say you must reconcile your bonds, other than the department's guidance where they, when they do a proactive visit, come out and say, why haven't you reconciled your bond account? So they're still giving that guidance of, on a monthly basis, encouraging bond reconciliations on the same basis as you would a trust account, but it's not written in any of their guidance anywhere any longer, which is unfortunate. But what we're generally looking for there is, at least on a quarterly basis, if not a monthly basis, that you take your bond listing from Bonds Online, you take your bond listing from the software and reconcile the two back to each other.
So just on that, the within 10 days is not a compliance requirement, it's a recommendation.
It's what the department terms best practice.
Okay.
And therefore, if you don't do it, something that when they do a proactive visit, they'll list as a breach for you.
Yeah.
Well, it's not a breach though. It's not a
You're right.
suggestion, it's
Yeah.
recommendation.
Yeah.
They can't breach you on.
Correct. They can't breach you because it's not in the Act,
Yeah.
but
Yeah.
it's still their definition of best practice.
Yeah.
So from your audit perspective, say if someone reconciles monthly but does it monthly, if you pay off the month, it's not an issue for you.
No.
It's not a reportable issue, is it?
We would be looking to see that it's done within the 10 days because the conversations we've had with the department is that that's their interpretation of the requirement.
Okay.
So where we see the bonds not reconciled within 10 days, where the reconciliation isn't regularly completed,
Yeah.
then it is something we put on our management letter.
Yeah.
But again, we can't point to the Act and say you've breached the Act. All we can say is you haven't complied with the department's interpretation of best practice. Obviously, no buffer funds, no buffer accounts, which we see constantly coming up, and it can actually be inadvertent as well. So sometimes, or what we would strongly recommend is make sure you're actually reviewing your trial balance every month, because sometimes you can get those almost like system accounts where it's a suspense account or a levies due or a advertising account that doesn't get cleared out properly, and if you have a small amount of funds sitting there over a period of time, that then ends up getting counted as a buffer account. Obviously sufficient narrations when you're putting any journal entries through to explain what happened. And if you are going through the process of closing down, there's then that one-off termination audit up to from when you hand back your trading certificate within 5 months to be lodged with the department. And the proactive compliance visits, they do have that checklist on the website that you can actually download and check on yourself to avoid. Unclaimed monies. Such a nuisance, but I almost say an administrative nightmare, but you can't avoid it. What we see is that the softwares often don't track unclaimed monies very well. You do have that ledger account there that you can put them into, but it generally can't print out a report for you of what items make up the total, other than a transaction listing that you have to go through and cross everything off. So one of the things that you need to make sure you're maintaining is a list of which particular items make up the balance of your unclaimed monies ledger. What date were they received? What was the narration on them? They sit there in that unclaimed monies ledger. You wait until the 31 December, that's 2 years after you received it, and then in the January following that, then you can advise Department of Treasury that you've got the unclaimed monies in your trust account, and then you sit back and wait another 18 months, and then they send you an email saying, here's the EFT details, please pay it to us. So you end up with those unclaimed monies sitting in your trust account for quite a few years before you're ever able to disperse them. And that makes you think back to 10 years ago where you could just send a cheque anytime you liked with GST adjustment 5 cents that we did see going through to unclaimed monies department. Obviously why they've changed to this process. So it is a lengthy process, it's not actually complicated, but the thing to make sure is that any funds, when you are putting them in your unclaimed monies ledger, sometimes charges can go through that aren't actually what was in your authority to act. And I'd say one of the most common errors we've been identifying there is where the authority to act may say your fee is 6% including GST, but then when you go and fill it in your software, the box to put the percentage is an exclusive figure and you put 6% there, and the software then ends up charging them 6.6%. And so you're then overcharging because of a data entry error. So making sure that whatever's actually in your authority to act, that's the cap on what you can charge, obviously, but making sure that the software doesn't charge more than that. We also like to see, obviously, that your authority to act has been signed. It identifies the property, that paragraph at the bottom where the client signs to say that they've received a copy of it, that they have signed that, or if you've emailed it to them, that you can actually provide a copy of the email saying this is where we sent it to them, and that you've got the relevant statements on commissions, which if you're using the template reward products, that's all in there. verification of ID, so doing the 100-point ID check. If you've done the 100-point ID check, you've met the requirement, that's easy to show us. But what then comes up is people saying, well, this person's been my client for 20 years, they're my brother, they're a relative, I know them well. Do I have to do the 100-point ID check on them? Where you choose not to do the 100-point ID check, what we then look for on the file is some piece of paper or some document that shows how have you ID'd them without doing a 100-point ID check. So we would, in those cases, accept a file memo or a note that says, I chose not to do a 100-point ID check because they've been my best friend for the last 20 years. I know who they are. Something like that. And the security of documents, one of the things we'll ask about there is what physical security do you have over the client records, but then also asking about the IT security, where I think what we're seeing with so much of these fraudulent type activities recently is that that almost becomes the bigger risk of seeing, have you considered it, have you put appropriate processes in place? So as a quick aside from real estate to IT, for something I get enjoyment out of, please make sure on your emails that you've got the two-factor authentication turned on. We're seeing a lot of people who are using like the Office 365 type products. It has that function, but it's not turned on by default. And it's one of the easiest things that you can turn on, so that when your email account gets linked up to a new computer or a new device, it'll ask you to pull out your authenticator app and type in the code. If you haven't got that turned on, it's really quite basic. Please turn it on so that it just makes it more difficult for people to hack into your emails. Obviously, very strong passwords. Some of the password manager softwares can actually generate strong passwords for you. So rather than having welcome1 as your password on every product, or password one, you use one of those products, you log in, you say, I'd like a 16-character password that includes all the special characters, and it'll just generate for you a random collection of characters, and you can use those password managers to have a very strong different password for every product. And you may be interested to have a look. If you see the link I've put there, the Have I Been Pawned? If you go to that one and type your email address in, it'll actually give you a list of every data breach where your email address has been pulled up in that. So especially for those people who like to use the same password for every different product that they're using, if your email was with LinkedIn and it was included in the LinkedIn breach, then that is in one of those password lists, and if you've got the same password on every other product you're using, not a great outcome. So if you, in your own time, go and put your email address in that, you might be surprised at what you see. And obviously the ransomware type things as well, and the problems that can lead to. So making sure you've got appropriate IT security is very important. When you buy a rent roll and there's problems that come in, seeing what you need to do in those cases. So what we sometimes see is that if you purchase a rent roll off someone, they send their money through, they can give you a trial balance, and included on the trial balance is some kind of weird suspense account that they are trying to give to you along with the sale of the rent roll. Now, whether you have to accept that or that's not part of the rent roll, obviously the discussion there, but once it comes into your trust account, it becomes your problem. Saying, well, this was because of the old agent. Again, it's your trust account, you're required to look after it, making sure that any of those brought forward errors that come get dealt with, and overdrawn ledgers as well. Fraud or theft, unfortunately we're seeing a little bit more of this, especially through IT and email scam type arrangements. So if it does occur, notify DMIS, get the auditor in to do a special audit, notify the police, replace the money straight away, and then tell your PI people about it as well. So hopefully you don't have to go through that process, but it is there. And the other very common question we're regularly getting is, we'd like to be a paperless office. We have everything on the computer. What's the... When we get asked from that perspective, my response is, you can store everything electronically, the requirement that DMIS puts out is that you must have everything in a format that is capable of being printed to paper. It doesn't mean it has to be on paper, but there are some documents that need signatures on. And so something like your bank reconciliation, if you're going to do your monthly bank reconciliation, print it straight to PDF and then just save the PDF document. When we then come along to do the audit and say, has the licensee signed this? If it's only a printed PDF, we may not be able to see that the licensee signed it and when did they sign it. So with something like that, that may be one where you actually print it to paper, sign the paper and scan it back in. Or if you want to avoid the paper entirely, look into one of the products, something like DocuSign or one of those electronic signing softwares, so that you can print it straight to PDF, the licensee can sign it, and then we can actually see, yes, the licensee did review it, did sign it, and that it's date stamped at that time. So the common errors. What do we constantly see everyone doing wrong that I really hope you don't do wrong to save us having to actually report the breaches for you? So the bank reconciliations. We're constantly seeing either they're not signed, they're not dated, they're done more than 10 days after the end of the month, they're not up until close of business at the last day of the month. If you've got interest-bearing trust accounts, that they're either not reconciled at all, or you haven't actually recorded the interest deposits onto them. So how many, I've seen it quite a few times where you might have a record of the interest-bearing trust accounts, but we then look at the statement and what we see is there's 10 monthly interest deposits on the statement that you haven't recorded into your interest-bearing trust account records. Again, all of those are not difficult things to avoid, but that we do constantly see. Incorrect entries in the trust account, and one of the things there is obviously the trust account is only for real estate transaction activities. So those couple of people who've tried to put their P&C funds and hold them in their trust account or their local sports club, I can see you laughing at it, but we have actually seen that happen in a trust account. So that's why I put it on the screen saying, please don't do it. It doesn't meet the requirements. And all funds you receive obviously have to go into the trust account. So keeping the cash in the drawer, even if it is just deposits on a lease application, still has to go in the trust account. And the unidentified funds, making sure that you do actually have a regular review on that, so that when we print out your trial balance and see the balance of the unidentified deposits and say, can you give us the listing of what makes this up, that you are actually able to provide that listing. If you're not actually preparing that, then that can be an issue. Entering deposits into the trust ledger. As was mentioned earlier, the department has said they will not complain if you do it weekly. When we look at the Act, it says if you receive money, it should be recorded by the next day. Incorrect titling of the accounts. If you're opening any new accounts, just make sure you've got the right name on them. When you get the bank statement through, have a look to make sure the bank has actually set it up correctly. And not having correct authorities to act, because what the requirement there says, if you don't have the authority to act, you're not entitled to the fees. And so that's something we're looking for, to make sure that you do have the authority to act. It has been signed, it is there on file, it does list what fees you can charge, and you don't charge fees in excess of that. And so especially in relation to things like the GST, making sure that that's entered in the software correctly, so that you do only charge what you've agreed and not 10% more. Rental deposits I've mentioned, we do see that. Delays in banking, that especially with any cash deposits, that next business day requirement is there, and not having documentation of the ID checks. And I think that the department there says if you're doing the ID checks, to keep copies of all the IDs on file. I've seen a few agents who've queried and said, well, privacy rules, I want to see the ID, but I don't want to keep a copy of it, I don't want to have that on my file. The department's current guidance is they're saying if you've done the ID check keep copies of all of it. From our perspective, we're looking at it and saying, we just need to have evidence that you have done the ID check. So whether you've kept copies is not something of the actual driver's license and the passport. It's not something I would put a breach on, as long as you have documentation on file that says, yes, I've seen it, and put the ID number or the reference on it or something like that. Overdrawn accounts. While we don't often see overdrawn bank accounts, overdrawn trust ledgers is something that we are regularly seeing, and any time that does occur, you have that automatic mandatory requirement to report to the department and the auditor. And obviously keeping your data entry up to date is very helpful in avoiding that, because once you've recorded the transactions, the software then won't let you record another transaction. It will take a ledger overdrawn, but if your data entry is not up to date, it can occur. And the same is there even for bank errors, where unfortunately we do see a few too many bank errors still coming through. If the bank withdraws funds that weren't meant to, record it into a suspense ledger or a ledger that lets you record the transaction, and as the licensee, you then have to put in funds to make up that difference until the bank 6 weeks later fixes up their error. Buffer accounts are clearly not allowed, but we do regularly see, and so any funds that are in the name of the agent, so it can be where maybe as the licensee you own a property that you manage yourself, so if you've got a ledger in the licensee's name or funds due to the agency, we'd expect to see those cleared out quite regularly, as well as any of the system accounts of levies, sort of payable amounts, whether it be leasing fees, property management fees, GST, all of those type accounts, that they are regularly being cleared out to nil, rather than just sitting there and never being looked at. Your trail certificate, it does actually need to be on display, so if you've just got it sitting in your drawer, not quite, it needs to be there so that when people come to your office that they can see the trail certificate. And making sure you've got your current certificate on the wall. We have seen it where the one on the wall is expired and the new one's still in an envelope in someone's in tray. The statutory declarations, so when we finish the audit and you have the stat dec to sign, making sure that it has the correct name showing on there, that the licensee name isn't spelt incorrectly, that the bank accounts, all your accounts are listed, that it is witnessed by an authorised witness, obviously quite important there. And any overdrawn amounts that come up, making sure that they do get reported.
Just a question about errors going back a couple of slides. If there's a payment error, for example, in the trust account, it goes out and it gets returned the next day. That's not really an error that needs to be reported, right? Because it's just someone's given you the wrong bank account, and then you repay it again out of the trust account. For example, you process a payment and it's got a wrong account number.
Yeah.
So you get the funds returned the next day or within the same day, possibly sometimes the next day. And then the person calls up and says, oh no, I gave you a wrong number, please send it to this correct number. And you do a repayment. Now, from that perspective, you don't really need to do a reversal in the ledger because it's paid and you're just doing a payment correction. Or is it seen as an error where you've actually got to reverse it in the ledger and then pay it out again?
I think where it ends up being an error that's reportable, you're probably right that there's a level there that would not be reportable. So where a supplier has given you the wrong bank account details, you make a transfer, it comes immediately back as this account doesn't exist. That may not be reportable because the funds haven't, well, while you've tried to send them, they've bounced back. But if they gave you the account number that was a real number but a wrong number that belonged to someone else, you send the funds out and maybe they do get deposited into an account, and then you have to get the bank to do a trace, that could then end up as something that is reportable. So I think you use a little bit of judgment and common sense as to where you draw that line. But I would say even then, it's something that you still should record into the ledger. So the fact you've done a payment, it's bounced back and it's gone out again, there's then 3 lines that appear on your bank statement. So there should be 3 lines in your accounting software. So you should record the payment, record the bounce back, record the new payment to the corrected details in the trust software. But in that sense, I wouldn't see that as a reportable breach. So, after I've been talking for quite a while, hopefully what you can take away is the trust account handbook. Please do go and read it. It's only 20 odd pages long. It's actually not that difficult, and it's something everyone should be aware of the contents of. Make sure you've got checklists and processes in place so that you make sure that you're completing all the requirements every month, and go through and do a proactive compliance audit on yourself so that you know what the department's expecting, that you know you're complying with all of those requirements. So, any questions?
In the event that you're closing your trust account, obviously, it's going to be a little bit more. What is the requirement for unclaimed monies that are less than 2 years?
Very good question. So the question was, unclaimed monies that are less than 2 years when you're closing your trust account, what do you do? Department of Treasury do actually accept unclaimed monies earlier than 2 years in that situation, but you need to you can't fill it in on their normal form because they'll just bounce it back. So you need to contact Department of Treasury and say, we're closing down, we've got unclaimed monies to send through, and then they will accept it prior to the 2-year mark.
Just another small one. VPA, contractors are paid on their accounts. Agents' fees, do they have to wait for settlement to pay their monies, or can they take their money prior work has been done? You know, like you've got different charges.
So when you say agents' fees, if it's the actual fees for the settlement, then obviously not. But if it's the marketing costs, then you can take those out of the trust account prior to settlement, but once those fees are actually due. So.
With the signing within a certain time frame by the person in bona fide control, what if the person's on holidays for 4 weeks?
As the licensee, you can delegate that signing responsibility to an appropriate person in your absence. So if the licensee is going to be overseas for a period of time, for instance, you may delegate to someone else who's got the appropriate qualifications to sign on the bank recs and things on your behalf. And then when you return, you might then review those documents subsequently to check you're still happy with them. Or you might do it remotely. So it may be, and we see this with some of the softwares, that even when you're away from your desk, you can still log in, review it, and sign it in a remote fashion. So either way meets the requirements, but to say I'm on holidays, I will only do the bank rec or I'll only review the bank rec when I get back, that then wouldn't meet the requirements.
What do you mean by qualifications? So, like you're saying, someone else who's got their license.
Yeah, so I would normally be expecting, if you're delegating the signing of the bank rec function, because that's something that normally the licensee would do, then someone who perhaps has their own training certificate or someone who's got sufficient experience. So that's the part where it's not written in the requirements anywhere of what's the minimum requirements for who you can delegate to, but you'd want to delegate to someone who's got sufficient experience, so probably not to your receptionist, perhaps.
Do you need to keep a record of who signed that, this person to do it because of on holidays?
It would be very sensible to have a record of providing that delegation. Whether that may just be an email to them that you print out, it doesn't have to be anything formal, but then when they sign it on your behalf, they can actually say, well, yes, I was given the authorisation to do this.
We're gonna change the management software, halfway through the audit year. Is there any extra audit that you need to see?
Yes, so where there's a change of trust accounting software, what we would always look for is the final trial balance from your original software and the very first trial balance from the new software, so that we can put them side by side and line up that not only is the total correct, but on every individual ledger, the amount of funds to the particular owner in the old software matches to what starts in the new software. And beyond that, no, nothing special.